Yeah, so over the last 2 years, we've been embarking on an expansion to take Metro's production capacity from about 3.5 to 4 million tons up to 7 million tons. So we've spent of the order of $36 million on that over the last couple of years.
Good morning and welcome back to the Proactive Studio. Joining me today is Metro Mining CEO Simon Wensley to discuss the company's outlook, the bauxite market, and the 2025 production season. Simon, it's nice to meet you.
Yeah, morning, Jonathan. Nice to see you.
So let's start with the company itself. Can you talk us through your projects, what you do, and why you targeted bauxite?
Yeah, sure. So Metro Mining is a bauxite producer on the Cape York Peninsula. So we operate about 95 kilometers north of the Weipa town. We run a full flow sheet from mining through to shipping using fairly standard mining methods, and something that's a little bit rarer in Australia anyway is a transshipping operation using tugs and barges to take our bauxite out to the Gulf of Carpentaria, where we transship the bauxite to ocean-going vessels that then go off to the customers. We've been around since 2018, and yeah, bauxite is a critical mineral in inverted commas. So it's the raw material that makes aluminium. So aluminium is one of the most important metals in the economy today. It has been for many decades, and now is finding new uses, particularly in the energy transition, in renewable energy like solar panels and wind turbines, in transportation such as the lightweighting of electric vehicles, planes and trains, etc. Use inside batteries. It's the second most important metal in an EV battery, and it's used in grids. So obviously with copper, it's one of the most important metals in transporting electricity from one place to another. So those are the big growing sectors on top of the traditional sectors of construction and food packaging. Things like beer cans and food wrapping, etc. So these are it's growing at about 3 to 4% per annum. So it's a good sector to be in.
Yeah, and it's larger than you'd expect it to be, because it's not, when you talk about EVs and energy transition, you're talking about graphite and lithium and all those things, but you don't really take too much note of bauxite.
That's right. It sort of flies under the radar a little bit, and of course, bauxite, doesn't have the word aluminium in its name specifically, but it's the only way. Bauxite is the only way that you can make alumina, and then alumina is the only way that you can make primary aluminium. So it's it's a very important value chain. There's a strong history of it in Australia, from all the way through from bauxite through to aluminium products, and of course it's produced all around the world for all of those purposes.
So let's talk about the work that you're doing. You recently undertook maintenance activities for the barge loader and offshore floating terminal. How do they enhance your operational efficiency?
Yeah, so over the last 2 years, we've been embarking on an expansion to take Metro's production capacity from about 3.5 to 4 million tons up to 7 million tons. So we've spent of the order of $36 million on that over the last couple of years, and the work we've just undertaken, that was complete in the second half of last year, and we then had to go back and look at some of the pieces of equipment that didn't really get much attention in that expansion, to go back and do some maintenance on that to ensure that it was able to operate at these new higher levels. So that's the reason for that focus. The barge loader is a critical part of our infrastructure, which loads the barges that go out to the ocean, and so that's been in place for 6 years since we started. So it was due for a bit of an upgrade and a bit of a refurbishment. So that's been the focus of that.
And just want to touch on the wet ore handling equipment as well. You put some investment into that, the wobbler screening circuit. What does that mean for the company and the 2025 production season?
Yeah, Yeah, good question. Look, it it's a very important part of our strategy. The way Metro was set up initially was pretty much just a dry season operation. Obviously, in Cape York in Northern Australia, we do get very strong sort of wet season in that, sort of January, February sort of period. So we've been trying to move much more towards a 12-month operation. I'm not sure we'll ever get quite to 12 months, but the ability for us to operate in those shoulder periods when it does get wet, start to get wet in that December, January, and in the sort of March, April. I mean, that's important for our customers in terms of being able to supply them year round. It's important for our workers who kind of would like to get a job for most of the year, and important for our economies of scale and costs in order to be able to sort of spread those over. So part of our expansion strategy was not just about expanding production, but also making it able to operate in those wetter ore conditions and in more difficult weather conditions generally. So that was part of that. And the wobbler screening circuit is a technology that's used all over the world for stickier ores and stickier materials, and that's why we put that in here. And it's got use in bauxite. It's similar technology used in Gove in Northern Australia, also in Brazil and in West Africa. So we knew it had a good application, and we thought that was something that we could do to improve our productivity during those wetter periods. And we've done the same strategy applies to the transshipping expansion that we've done, and purchasing the Ikamba, which is the local indigenous name for saltwater crocodile, as we call it. So that is our new transshipping platform. It's a much bigger, more resilient transshipper than we've used in the past, and that again is designed to operate, in weather sea conditions that are a bit more difficult than we have in the dry season. So it's all part of the same strategy, expanding operations, but also making the operations more resilient.
And that expansion, it will no doubt improve that financial outlook as well. There's been a 25% increase in Q2 pricing negotiations. So how does that actually affect your financial outlook, and what are you looking at?
Yeah, so the expansion was obviously designed to increase production, but at the same time reduce our costs. And so, as a bulk commodity producer, costs are critical, as well as obviously the quality of our product. And so that expansion will take us right the way down to the bottom of what's called the cost curve. So we'll be one of the lowest cost producers in the market, delivered to the customers in Asia Pacific. So that was a critical part of the strategy, and that enables us to all commodities go through cycles in terms of price. And we've got a very good we've got a very good price at the moment in terms of that. As you mentioned, we're probably close to the top of the cycle with respect to that, but we also need to be resilient at the bottom part of that cycle. But at the moment, the bauxite market is quite tight. We've had record bauxite trade over the last 3 years, sort of consecutively. So each year has been a subsequent record, and not just by a small margin, but by double-digit growth over the last 3 years. So and that's continuing over the next couple of years as well. So we're seeing increased alumina production capacity come on throughout Asia Pacific, in China, in India, in the Middle East in particular. And so us supplying into that market is the core part of the strategy. And we're going to obviously try to make the most of those lower costs and high prices. So margins this year are certainly looking like certainly that they'll be the best margins that we've ever produced out of this operation, based on those two dynamics occurring.
Yeah, it's looking pretty good. And you're targeting 6.5 to 7 million wet metric tons in shipments for this year. How does this compare to previous years, and what challenges, opportunities lie ahead for you?
Well, last year, we produced roughly 5.7 million tons. So that was 24% higher than the previous year. And this year we're looking at a similar jump again. So that's, as I said, a result of that expansion capacity that's now fully implemented. And so yeah, it's a step up. It requires dedication to deliver on the capacity that's there. It requires sort of a reliable production, and being able to extract the maximum value from that new equipment that we've got. So trying to repay the funds that we've put into that expansion. So look, this year we should we should be able to pay down a significant amount of the debt that we've got there with those margins, and also we hope maybe by the end of the year we could actually sort of return some benefits to shareholders.
Mhm. And just finally, Simon, you've touched on probably a larger amount of this as we've spoken here, but what is the investment case for Metro?
Yeah, well, look, I think we've talked a bit about the aluminium growth and the aluminium sector. I think that's a very strong thematic at the moment. If you're looking at trying to invest in metals and minerals, that's certainly a place that you should be looking as an investor. Then when you look at where in that value chain you might invest, as has happened in many other minerals like iron ore and coal, upstream in the mining, in the minerals sort of side of things is often where the rents can accumulate, and that's, I think, happening at this point. The industry structure is changing in terms of that cost curve steepening, and with Metro's costs reducing to one of the most competitive in the world, then our margins should be very, very resilient. And so I think that is the core of the case, and there are very few places to invest in bauxite. In fact, we are the only operator, the bauxite producer and operator on the ASX. So if you want to invest in that upstream bauxite sector, then we're the only place that you can invest. So look, I think in a nutshell, we're unique in that respect, and I think the dynamics of both the sector and our company are heading in exactly the right direction very rapidly.
Simon, I know you're busy. You've got your roadshow this week, so hopefully that the rest of that goes well for you. But thanks for your time today.
Thank you very much. My pleasure.